Hello YouTube, welcome back to the Wealthcaster channel. Definitely happy for you guys to stop by. Hopefully you guys had a great weekend, and I'm looking forward to how the market does this week. So I'll start it off with, we're going to do a portfolio review for my son's custodial account. Definitely has been doing great over these past few weeks. Hit another all-time high in the account. So to start off, just want to let you guys know that we do have the June 2026 watch list out for this month. So it does a quick recap of what happened last month, and then we got the entry prices listed below for the stocks that we look at, the ticker symbols, and we have the ETFs at the bottom. All right. So these are just our ranges that we have for our daily entries and weekly entries. Again, the list pretty much stays the same for over the long period of time. Some of these names have been here since 2021. So they're just stocks that we keep an eye out and we just watch for a long period of time. Every now and then I may switch something out, put something else that I think is going to do better this time around on this cycle. So definitely give it a look. The link will be down there and below in the description. So let's go ahead and dive into my son's account. So I'll switch over to the next screen. So quick rundown and recap of it. So his account now is at $9,565. So it's been doing great. And just to go over the positions that he currently holds, right? So he has FNILX, which we're going to look into first. We have CrowdStrike, we have Microsoft, SMH, Meta, FBTC, which is a spot Bitcoin ETF, Google, Amazon, and Eli Lilly. So we're going to start from the largest allocation and end off with the smallest, which is going to be Eli Lilly. So we're going to do some charting, looking at them, see how they're doing, how they're performing, things of that nature. So we have FNILX first up. So as we can see here, obviously it's all-time high, which a lot of these names you're going to see probably be near all-time highs. So FNILX, what I highlighted here were opportunities that were great to go ahead and get into that stock or into that ETF or fund. So we see that it has a good history of bouncing off the 50 and 72 weekly moving averages. Reason I didn't do a daily for this because this does not move throughout the day. The end of the day price, right where the market closes at, is when the purchases will be made for the stock. So let me show you what I'm talking about. It's not going to have any candles for daily movement, which is why we're looking at it on a weekly basis for this name. But it's a very good name too. It's has all the large cap stocks, and there is zero expense ratio, so there's no fees for this, which is why such a big portion of the portfolio. And if you see my past videos when it comes to the custodial account, I believe in having a big foundational piece for the portfolio, pretty much for any portfolio construction, just to have a big portion of it or the foundation of your portfolio to be a index fund. It could be the Qs, it could be SP 500, something that holds the most weight in your account. So for us, it's FNILX for him. So let's go ahead and go over to the next name, which is going to be CrowdStrike. Oh, and also for FNILX, since the start of this account, we started this account for him in October of 2022. For FNILX, we are up 94%, 94.65%. So let's go over to CrowdStrike. CrowdStrike, as you know, made a couple of videos on this, how we started a position for him. And for this, we started his position in February. Let me go look it up. February 25th of this year. So this name has been doing amazing. It is now the second largest position in his portfolio, just strictly off of growth. Because we got in February 25th at an average cost around $363. And as you can see, obviously shares are now $763, hit an all-time high of $766.98. And for that position, we are up 110% on that position. And what was that? about 90 days, which is pretty freaking amazing to see there. But to go dive a little bit deeper into it, so for CrowdStrike, as we mentioned before in the past, this whole SaaS apocalypse here situation that we had going on with the whole, Mythos, Claude, having all these things pop out, and software took a major beating. So you see here, SaaS apocalypse is what I kind of highlighted for this whole area for when we saw CrowdStrike fall, Microsoft, all software names, took a dive, and everyone was like, software is dead, and left them for dead, right? Obviously, as we mentioned before, there are going to be some companies that are going to be affected. Does not mean they're going to be erased, or going to be gone. There's going to be some companies that's going to be able to pivot and last this out. And then some companies, I feel like CrowdStrike and some of the other cybersecurity names, just as a byproduct got affected, right? And even within there's some companies too that we've seen that tank, like Zscaler had their earnings report, then they dropped like 20%. So obviously not every name's safe, not every cybersecurity name is going to be safe, but I'm still a believer in going with the winners until they prove you wrong, right? That's how I go with this. Same thing for CrowdStrike. They had their blunder a couple years ago when they had basically shut the world down and the stock tanked to, I think, like the high 180s or something like that. Great opportunity right there, right? But obviously, a lot of people left them for dead back then too. Now we're at 766, right? So obviously, you want to go ahead and I feel like picking out the cream of the crop, right? The best of the best, right? I don't care for, bench players, things like that. So you go for your star players. I feel like they're a star player in the space, which is why we have tied capital to it. But just to highlight, this was your opportunity right here, right? And it sucked going through it. I remember we got around, like I said, February 25th. It's pretty much, if I can find that candle, right here. Then we had this little rally going up. It was like, okay, probably because I heard the rumors, hey, software is back or cybersecurity is back. Consolidated, took another dive, another little run up, another dive, right? So definitely play with your emotions when you see your account moving up those percentage points and then falling back, moving up, then falling back, right? But it's also a great opportunity to have gotten to the name, right? Buy, hold, right? And then we can see the turning point. I marked this arrow out right here, was right here. So we had a close finally above all the moving averages. And we had this little doji here that kind of tipped back and touched the 253 and the 200, right? But from that little doji became this long rally. And also, this is a sympathy play as well, right? As earnings season went on, we got reports from names like Snowflake, names like Dell, other names around the software space that kind of cemented the reason we need these companies and the future of these prospects, right? What these companies are going to be coming and also how they're going to be needed, right? So seeing those type of reports, you seen like Snowflake, I think jumped like 30% in a day. Yeah, Dell overnight, their stock shot up crazy. So we're seeing all these names that are kind of left for dead and kind of forgotten about turn up and actually get reawoken and alive again. But obviously, people are going to unfortunately try to chase now when you needed to fall in love with these names when everyone hated them. That's the biggest thing. You're going to kind of see that cycle always replay over and over as time goes on, as you grow in your investing journey. Don't get me wrong, there are some stocks that and some names or some sectors that are like, oh, you just don't trade, you don't invest in, you just leave them alone. But I feel like you have to look for those names that are needed. Cybersecurity is a necessity, right? And also it's integrated so much into enterprise, into our everyday lives. And again, I go back to that whole the world shutting down. Yeah, stock tanked for CrowdStrike, but then it also showed you and highlighted how important cybersecurity is. So if you look at the other side of that equation, it's like, damn, this is really needed. And then also too, for all these threats going around, I think I mentioned this before in one of the past videos. If there's something that's going to be threatening a space, you can look at what's being threatened is going to try their best and their hardest to make sure they can overtake that threat and plan for that threat, right? So same way AI tools are coming for them, or SaaS tools are being created that's going to take these out. No, I look at it as CrowdStrike could go ahead and take those same agentic tools, those same agentic software, and implement it into their own ecosystem, create their stuff to be able to make sure they stay a powerhouse. That's how I look at it. Standing with all these other companies that are coming with AI stuff, Microsoft is going to make sure they still stay around. Meta is going to try their best to make sure they still stay around. No, none of these major companies are just going to lie down and let themselves be disrupted without fighting, right? So that's CrowdStrike right there. We're going to look at on the weekly chart. So I had went already and kind of map these things out. So on the weekly, we also see here at the 100 weekly, great opportunity, right? Again, this is many weeks here to kind of wait it out. But you play in the long game. You got to have patience with it. So all these are opportunities, right? You had 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 weeks of opportunity right there to accumulate, get a position. Even if you bought one share, even if you put $50 in, whatever the case may be, whatever you had, but an opportunity for you to go ahead and start building a position. And then over time, obviously, it paid off. Now, it's not going to say that we're going to stay up here. It's not going to say that it's not going to be a correction anytime soon. It's not going to fall back to the moving averages. But again, this is why you go ahead and into these positions at great levels. So when the pullback does happen or the drawdown does happen, it's not going to be as bad as someone who bought up here at an all-time high and then faces the fall. So, hopefully it doesn't happen, but again, we can't predict. But if this falls all the way back down to where we bought it at, I'm just flat. We're just going to be flat in a position. We're not going to be negative, and I can live with that. I'm okay with that. So let's go on to the next name, which is obviously another software name. This is now his third biggest position. Microsoft was number 2, but it got overtaken by CrowdStrike. And Microsoft, I mentioned before, we've been flat on this position since 2024. Let me go see when was the first purchase. We were flat on this since August 27th of 2024. We were flat. And then finally, Microsoft is waking up. We are now currently up overall 16.91%. Granted, that sucks. When you look at, we've been holding this for close to 2 years, and it's only up about 8% on average per year, which is not something you expect from such a big name like this. But it's one of those things that also cemented the reason why we went ahead and made this purchase, is because definitely feel like it's grossly undervalued, definitely being disregarded. And we can see Microsoft is down, I think, as much as 30 something percent. And people just left it for dead for some reason. Excuse me. For some reason, it was just forgotten about. Don't know really why, but that's where you find the disconnect, right? Between what, big talking heads, Wall Street, whatever the case may be, and then you find your opportunities to buy, right? So we even seen people like who was it, Bill Ackman? He would dump shares of some other company. I don't know if it was Google, but he basically built a stake now in Microsoft. So he bought that recently, I think around here, a couple sessions ago, and then obviously stock popped and all that because he's such a big name in the space. But again, we've been buying Microsoft since August of 2024. So definitely am happy now to see that it's actually waking up a bit. But again, sympathy play with Snowflake, Dell, all those other type of names, right? So again, here, major consolidation we saw right around here. So this is at your 100, your 72, a little bit of your 50. But this is where it was hanging out at for a good portion of time on the daily chart. Then we see here, it started shooting up, then it gapped up here to today's candle that we see right here. This gold box here that I have marked out, that's the gap I'm looking for it to stay above, and then it could also touch into there, grab some of these orders, and either get pushed up to the upside or grab the orders and get pushed to the downside. Depends on what's sitting inside here. But we are looking for this gap to go ahead and get filled. But resistance right now is 253, right? So resistance is 466.67. So we still aren't out of the woods yet. So same thing when you look at the CrowdStrike chart, how we finally closed above all moving averages and then it took off. I'm expecting and looking for the same thing to happen for Microsoft. If we're able to a couple more sessions, I'm not sure if it's gonna be another gap up or whatever the case may be, but we get above this moving average at 253. That's the last line of defense. We get above that close and hold it, then it should be, I'm not gonna say off to the races, but then it should, that's a very more promising situation for the stock to keep on rising, especially after being in basically, a Microsoft winter. It's been, pretty much flat. Hasn't gotten any love or any attention. And then now it seems like people are actually trying to remember and be like, oh, Microsoft's around. It's like it's always been around. So definitely looking for that to turn around and come back up. Let's go look at the weekly. And then for the weekly, same thing. It's had its opportunities right here on the weekly chart when it touched 253 in the 200 week moving average, I should say. Had its opportunities. And then this consolidation is from the daily chart, but also you can see on the weekly chart how it's just even more prominent on opportunity that I was here trading within here, this consolidation range. And then same thing, have that gap. That gap pretty much touches the 72, and we should look to see it bounce off that 72 week moving average should it fall into that range. Let's go to the next position. Obviously, is going to be SMH, right? SMH now has become the third largest position in the portfolio after having such a great run. So you can see here, this was pretty much all the month of March. That gave you opportunity here around the 50, 72, and the 100-day moving averages. We do have a small gap here that still needs to be filled, and this gap is between 415 and 399.62. So pretty far away from that. Obviously, we're at 608, 607 right now. Not to say that it can't get filled, but it is a pretty far move for that to happen. And then our next opportunity is 488.99 on the daily moving average. But SMH has been doing great. Obviously, can't say nothing but great things about it. It's been moving well. RSI is, definitely in the overbought area. You definitely see some exhaustion here, some slowing down on it. Let's go ahead and look at the weekly. But SMH, I think, is a great, I'm always going to speak positive about it. I think it's a great foundational piece for those to have in their portfolio. I feel like you can't go wrong with it, especially in today's day and age of how important semis are and how important they are to the space for AI and all those things. I feel like this is a great exposure to have if you can't are unwilling to pick one individual name to try to, I guess, place all your money on. I feel like if you're gonna be positive about the AI space, this has to be a part of your portfolio. That's just my opinion on it. But you can see on the weekly chart, same thing, above all moving averages. Even beginning to slope upwards. Definitely, again, we're in that overbought territory. But remember, we can stay overbought for weeks at a time, maybe even months at a time. It's just something to signal to let you know the sentiment around the stock or the ETF. Then let's go to our next name, which is Meta. So Meta definitely has a precarious situation, in my opinion. I feel like they're the most confusing name when it comes to this space for the AI build. All right, They have a ton of capex spending a ton of money on it, and then their situation, I feel like, is what is it going to yield and what is it going to turn into? Because obviously we have names like CrowdStrike, we have Microsoft, and the other AI players like who is it? Amazon is their capex spend makes sense. Google, because you could kind of see it and understand it. For Meta, it's kind of like, how are you guys going to benefit from it, right? The reason I say that is because Google, Amazon, Microsoft, they have like the enterprise play on it, right? They're integrated into your businesses. And Meta, yes, businesses use it in a sense but that's really for Meta, like Google Ads. It's really for advertisement, and yeah, you need an online presence, so people are going to be on Instagram, people are going to be on, Threads, people are going to be using, WhatsApp and all that other stuff for business. But I don't feel like they're as strong as a moat in terms of like what Microsoft has. Like Microsoft 365 is everywhere, right? Everyone uses Microsoft. Google, you kind of got to use Google for every single thing, right? So Meta, it still has that attachment of the social media play on it, which is one of the big reasons why we even got into this. The name was for the social media, right? I feel like AI is kind of like it'd be beneficial if it works out for them, but the reason why we got the position wasn't for AI. We got in position because of the hold it has on the social media space and how important that space is for human beings, people that want to connect, people that are trying to make their business online, advertise, social interaction, things like that. So for us, the AI, if it pans out for them, is just a benefit. But I feel like their challenge is how to really get it integrated. Because I don't know if you've been on IG, you scroll, you'll see, I guess, what the Meta AI thing that you download a whole nother app to use Meta AI, which is basically, we've seen how that kind of played out with Sora, Sora 2 or whatever it was that OpenAI had. Is basically just an app, in my opinion, of AI. The term is AI slop, but I look at it, you just watching AI generated content. I don't see the point of that. That's just my opinion on it. Some people fall in love with this, some people like doing that, but I look at it as you're just watching fake stuff, if that makes sense. So Meta, I feel like it needs to focus on, if they are going to be using these Gen AI tools and things like that, it has to be more than me creating pictures, me creating videos, and all those things. It has to really be a productivity tool, right? How are you making, whether it's the Meta ads or Facebook ads, whatever the case may be, how are you making it easier for me to promote my business? How are you making it easier for me to convert those that are following me, those that are on my page watching my reels, that are my friends, followers? How can I convert those into buying customers? How am I using these productivity tools that you're going to present to me to be able to convert people into buying and paying customers? So I feel like that's going to be their biggest challenge. And I feel like that's the biggest question mark when it comes to looking at them, right? Because they're spending a ton of money. And then also for them, they're also chopping a lot of heads. If you remember the year of efficiency that we had a couple years ago with Meta, how they were just laying off people left and right, they're kind of slowly getting into that bag again of laying people off. Um, and then they ran up after that, right? Again, it's terrible for people to lose their jobs and things of that nature, but especially in tech, it's very common for that to happen. And I feel like with Meta and Mark, he's doing that slowly but surely, cutting people loose, letting them go. But then again, we still need to see, hey, how is this going to pan out for you, right? I feel like they still have the most, you can even call it confusing, story around it, because they need to be able to develop a tool or tools or a suite of products that enterprise can use, because who has the money is enterprise. The everyday person like me and you, we're not gonna have the money that Meta needs to push the needle, so to be able to have the ARR, the annual recurring revenue that they're gonna need, and all those type of things to stay afloat inside this space, right? And again, you're competing with other people who have sweet products, other people that have ecosystems like your Amazon, like your Microsoft and your Googles that already have us entangled in their ecosystem. Meta still needs to work on that. And Metaverse, obviously, we haven't heard about it, but that needs to disappear. That needs to be a thing of the past, non-existent. The whole VR headset thing they had going on, I feel like whatever they're spending on those situations, they need to dead it and move on to something else. That's their biggest thing. And obviously the stock price is reflecting that, right? We're seeing from here, I didn't mark it out, but had a super huge drop here. There's another gap here too. I should have marked out here. Oh no, it's actually filled. And then have marked out here this consolidation area that we had. And then here's a gap I marked out. So this gap is ranging from about 660.58 to 622.58. And then we see that we went in there, grabbed some orders, got pushed down. We're looking to enter this gap, close it, and then again, same concept, break above the moving averages, right? So break past 665.75, then break past 676.26. We gotta break past the 200, 253, and then stay above it, close, keep grinding higher. That's what we need from Meta. And then for Meta, we're up only 19%, 19.85% on the position. And for Meta, we started our position in this name back in April of 2024. So the April position and the July position when we got some shares, 28%, 30% respectively. But overall, we're up just now it's 20%. The market is open right now, so it's live right now. So the numbers are going to change a bit as we're on here. But yeah, so up about 20% now on Meta. And then forgot to tell you SMH. SMH, we're up 163% on SMH. So looking at the weekly for Meta, you can see here another great opportunity. We're hugging around that 100. So you can see here, same thing with that consolidation and also that gap. So that gap's pretty much between 172 weekly moving average. But then again, this is a great opportunity. Not financial advice. I gotta make sure I always say that. Not financial advice. I'm not a financial advisor. Take your own risk, do your own due diligence, make sure you consult with a professional, yada yada yada, all that good stuff. But this, in my opinion, is a great opportunity to go ahead and try to acquire some shares, get some dollars in there. And we can see obviously from history back here, bounced off the 100, standing for history over here, 72 was a good opportunity. And then all-time high was 796.25, right? See it marked off right here. They could probably get back there. But again, I feel like they just have to get a hang and a handle of what the story is, right? What the reason is. How are they going to compete? Because all this spend, and for them, they have kind of the worst type situation to be in because you really don't have nothing besides social media. And then so far, all you're doing is showing us that you can make videos and images, and that's not what we need right now. We need an enterprise software productivity type tool that businesses can't live without, can't function without. So the next name on the list that has done us pretty bad in the short term. Overall, we're up 35% on it, but in the short term, has not been doing us well at all. We used to be over 100% on a position, which is FBTC. So the spot Bitcoin ETF, again, used to be up over 100%. So definitely had a nice drawdown. Obviously, we're still in good spirits about it because we're up 35% still. And also, we do understand the volatility when it comes to Bitcoin, things of that nature. I feel like if you're going to enter Bitcoin, whether it's actual Bitcoin on the crypto exchanges or buying a spot Bitcoin ETF, definitely understand the risks that come with it. The drawdowns could be immense. 70%, 60%, 50% drawdowns. Definitely don't recommend putting all your bread into it, everything you have into it, buying tranches, buying opportunities. Same thing for us. We start our position when this ETF was around like $30 and change. And then that's how we've been buying. And then when it reaches opportunities we feel like attractive levels, we buy more. But we wanted to mark this out. So this golden bar was the gap that we had. Obviously, we see the gap was filled. It got filled and pushed down. So we are having a trouble getting past these moving averages and staying above them for long term, right? So you see that we got past 72, 50, and the 100 couple sessions, then we fell down, and now we're below all the moving averages again. So Bitcoin, its story was another one too, where it's coming out like, hey, this was supposed to be a hedge against inflation. That story is panning out as well as it used to in the past. This is supposed to be digital gold. We obviously see how gold did and how Bitcoin did not do, right? So those two narratives now, this past year and change kind of proved it wrong that Bitcoin is neither of those things, right? Which I feel like a lot of people are trying to gear towards. But we do still have to remember there's still a lot of institutional backing. There's still a lot of situations where they're trying to justify Bitcoin's existence. And I feel like you kind of want to be on the right side of that if you can. So this is our asymmetric bet on it, going through a spot Bitcoin ETF, but also putting in dollars into it and just letting it do its thing. Again, position used to be up over 100%. Now we're up 35%, but we're not losing sleep over it because we put capital in there. And again, buying at attractive levels. Bitcoin, as you can remember, was trading at over 115,000, I think 125, 125K. People bought at that. Then it basically got chopped in half. So again, where you buy does matter, in my opinion, right? And I still believe dollar cost averaging along the way. But again, be cognizant and aware of where you're buying and what price you're paying for these names, right? So let's go look at it on the weekly. In the weekly, I had here that we need to reclaim the 100-week moving average, right? So us reclaiming that will be a great situation for Bitcoin, for this specific, FBTC, for this ETF. Us reclaiming that and holding it kind of sets us in a positive trajectory, because as of right now, we're like in no man's land. It's kind of like doom and gloom. Again, rise up, hit that liquidity zone or that gap here, and then tankered off. And then we got to hit it again. Hopefully, you can stay in it, but we need to break past it. So we got to get past this level again. Then we need to get past the 100 weekly and stay above it. Then we have the 50. Then we have the 72. So we have some levels to get past. So that's what, 77.33. That's 80.85. And then 81.57. Again, these are dynamic. These are going to be moving as price moves along. But as of right now, those are where the levels are that we're going to have to go ahead and push past those moving averages. But again, that's the outlook on Bitcoin. Still optimistic about it, of course. But again, enough of the portfolio where it's not, how can I say, it's not daunting. It's not like I look at it for his account, I'm like, oh, damn, I wish that money was somewhere else. Like, I'm okay with the amount of money he has in there to allocate to that position. So let's go ahead and look at Google. Google has been another great, positive winner over the long term. And we could definitely see here, completely forgot to mark out the gap for it. go ahead and mark out that gap for it. So Google, obviously, great winner. Long term has been greatly benefiting from this whole situation of AI and the name it's been, them coming out with their TPUs. Sorry, just marking off here. But them coming out with their TPUs, again, enterprise, how much of a powerful force they are in the space. Google's just been great overall, right? There's really no complaints about it. So we can look for it to fall back into this gap, right? So this gap is between 362.46 to 353.65, right? So this gap could get filled. Obviously, we can see hit all-time high 404.47, exhausted, kind of had this, candle where it looked like, buyers pushed it up, but then sellers pushed it down, still ended up green, but we did have some selling pressure here to make this body go all the way down. And then sellers, you can see next candle kind of went out and start pushing this name down. So we could get pushed back into here, depends on what's sitting in here, if it's going to push us up, push us down. Support's going to be at 346.37 in terms of looking at moving average support. So again, nothing but positive names to say about it. And we're going to see later on, I got to make a next video or next couple of videos, got to make something about quantum. So definitely, I feel like the names Google, Microsoft, even Amazon, I feel like they're just well-rounded in terms of what's the next frontier for stuff, whether it's AI, whether it's just regular tech, quantum, all those type of things, right? They have their hands in them. So I feel like you can't go wrong with these players that have their hands in multiple things. So Google overall up 173% all time on that position. And for him as well, we started that position in February 26, 2024. And we haven't bought any since March 1st, 2024. So been sitting in this position for a couple years, haven't added any more shares to it, and it's been doing pretty good to us. So again, up 173% on there. Let's go ahead and look at the weekly. You definitely see how I kind of had that strong move to the upside. And for the weekly, that first opportunity is 285.83 on the weekly moving average for it to get to. But again, this is another name too you could treat with the whole 10% drawdowns, things like that. We'll go ahead and pull that up. Let's see. We go ahead and look at that. Let's see what Google's 10% is. So their 10% is almost here, 367.75. So again, if you don't want to wait for that 100-day SMA, 200, or for that weekly, as we mentioned over here, getting in there, 367.75 is a good opportunity. We're about $7 away from that, so a good opportunity for you to go ahead and get in there. So Google, again, great, no complaints, nothing really to say about it. So then we have another player over here. We got Amazon. We are currently up 68.89% on that. And then for Amazon, had a new all-time high, as you can see there. And this was an opportunity that we had earlier in the year. Great opportunity when we held to that 400 moving average here. You see, you had all these days sectioned off here. There's opportunity. We do have a gap here to fill. This gap is between 219.71 to 213.68. Obviously, rocketed up here. You see how that 50 is pretty much shooting almost parabolic upwards. So Amazon definitely went on a massive run to hit all-time highs, hit up there, stalled out, and now we're kind of not really forming consolidation yet because it's still a little choppy, but hit those all-time highs. It's been doing great as well. Its support for moving average is 247.77. and just looking for it to hold those levels. So we'll look at it on the weekly. And then you can see here too, even on the weekly, it showed you that 100 right here for the weekly moving average was a great opportunity to go ahead purchase shares. So again, touch base on using our moving averages, using our discounts, 10%, 20%. But again, as you can see, going through all these charts so far, moving average, moving average, moving average. So you can see there's been multiple situations where these names have touched a key moving average, bounced off of it, or they consolidated around the key moving average and hung out there, then rocketed back to the upside. So again, this is why I personally like using key moving averages. I feel like it should be part of everyone's tool belt to go ahead and gauge, opportunity to go ahead to get into a long-term position for a name that you love. So same thing, Amazon, nothing bad to say about them. And then we're going to round out with Eli Lilly, which is our smallest position in the portfolio. And then definitely marked off some key points in history here to show that kind of has a repeating story here. And then you're going to see this name is going to be a lot more volatile due to the fact that it's in healthcare, but it's a leader in healthcare, but also it comes out with different drugs. And depends on what competitors are doing in the space, the GLP-1 stuff, the other drugs that it has in the pipeline, where the test results come out good, trials, things of that nature. So it's a stable company in terms of its size and growth, but also it is going to have its moments in periodic times of hiccups, drawdowns, gap downs, as you can see here, has its moments where it's hovering around moving averages. You can see in these 3 times just alone last year how it was holding around there, and then rock it up, but then sell off, right? And then sell off again, hated, then rock it up. I feel like it's just something that you have to be aware of. It's the same thing how I talked about Bitcoin. Eli Lilly is kind of one of those names too. You just have to be cognizant about that. But again, as you can see, as we went down the list of, it's basically what position sizing is in your portfolio. I have enough exposure for him from Eli Lilly for it to kind of help out, but also it's not going to tank him when things go left, things go wrong. But also add just a little bit of that healthcare slash tech diversification that I would like for him. I feel like they're very good in terms of getting tech like growth, but also being a healthcare name. So we can see here how we have those opportunities, especially right around here at 200, 253, and 400. And after that, start taking off to the races and then hit an all-time high. Same thing as we mentioned before with the other names. Hit some exhaustion, some sell-off. It might consolidate for a little bit, could sell off some more. And if it does continue to fall, we're looking for that 100-day moving average, 993.23. And this is another name too I feel like would be great due to its movement for a 10% number. So $1,034.19. I feel like it's a great opportunity for it there. All right, let's go ahead, look at the weekly. All right, so weekly kind of has the same situations here, 100 underneath the 100, right at the 100 and the 50. And then same thing over here, pretty much at all 3 levels, 50, 72, and 100. So again, it has a history of showing opportunities, and I feel like, doesn't mean it's always going to be exactly correct. But again, hitting these key moving averages give you those opportunities to go ahead, enter into a quality name, and use these indicators, I feel like, for quality names, right? It's not going to be, again, some random company no one ever heard about, or some company that just doesn't make any sense for a long-term investor. And this kind of helps if you are trading too. It kind of does help with trading, but I feel like it's best suited for long-term investors, people who are planning on holding on, for at least a year plus, 2-3 years in these names. But that's definitely how we're looking at it. So overall, that's the breakdown. Oh, I forgot. For Eli Lilly, we're up 40% in that position. But yeah, overall, that's the breakdown of his portfolio so far. Definitely has been doing good. All-time return on the portfolio since starting in October 24th, 2022, he is up 156% in this portfolio. So again, definitely happy for him, definitely proud for him. We're closing in on that $10,000 mark. So his birthday's coming up in a couple weeks. We'll see how the market treats us if he's able to close that out before. But this last run of $2,000 plus has been amazing. And this has all been, market growth. We haven't had no contributions into the account, I think, since end of February, probably early March was the last time we actually made a deposit. So this has been very great to see. But again, we'll go back and pull it up here. Appreciate you guys stopping by. Again, the watch list is out. We also have the past watch list up. So go ahead, look at the entry prices there, entry points for stocks, ETFs, get a little recap of last month, and see what we're looking at for this month in terms of ranges of prices, where to enter, things like that. Have the stock tool up here too, as what we've been using in the video. It's the store random ticker in the Bloom Energy. So again, go over the tool. Tells you your 52-week high, 52-week low, year-to-date returns, 5-year returns, gives you that 10% off discount to look for. Obviously, you see that for Bloom Energy, it has reached that part. Then it gives you your moving averages for weekly and daily charts. Then obviously we got competitors over here, so you can see what names in the space that kind of compete with this are similar to it. You got the stock analysis over here, basically break down what our thoughts are about whether we should buy, hold, sell. Got valuation, financial growth, technical position, analyst sentiment, macro sector climate, key risk. Got the bull, bear case, what to watch for. And then we have the SWOT, which is going to be our strengths, weaknesses, opportunities, and threats. And then the last, at the bottom, we're going to have a nice summarization of all the information that was pretty much mentioned up here, and be like what we're looking for, and certain things too. Long-term retail investor, do not chase this at current levels. Set a watch list. So basically the same thing we always mention. Try to look for moving averages and look for discounts in the name. So kind of going to be consistent with that across the board. And then we do have the stock score over here. So there's a stock that you kind of want to get some information in on, and we give it a grade. So it does not mean that that stock is hey, go buy this right now, hey, go sell this right now. It just gives it a criteria, like a number based on stuff we look at, which is revenue growth, profitability, the balance sheet, free cash flow, valuation, price and momentum, and market intelligence, right? So that's basically stuff from insider trading in terms of like what insiders are buying, like owners in the company, whether it's the C-suite executives, what they're buying or selling in the stock, earnings beats, misses, analyst reviews. So we go ahead and yeah, let's put MU. It's probably going to say low confidence basically in it because it's ran up so high, but it does run it through a little checklist, and then takes a little while, but it's going to give you a nice little breakdown and a score of what it is. So gave it a C. So basically a pass in terms of it. But this is how it breaks it down, right? So gives you a nice little scorecard over here: revenue growth, profitability, quality, balance sheet, free cash flow, valuation, price momentum. It's going to give it these things here. Gives you a nice breakdown of what the revenue looks like, net income, free cash flow, and then it breaks down even more what's going on inside each of these sectors, or in terms of each of these cards, right? Based on its financials. And then a nice little analysis at the end. So definitely use the tools, go on the site. This one, you do have some free users to use right here. So you got 2 free scores remaining here. But is one another tool that was developed by us to go ahead and try to make things just a little easier for you guys when it comes to evaluating. I do recommend using all the tools available to you, whether that's coming to my site, using tools, whether that's using your Claude, using your Chat GPT, whatever it is, Perplexity, whatever it is that you got to use to go ahead and get information so you can make, sound quality investments, use it. If you got to pay for it, use it. If you got to read books, go to the library, sit down, read a book, go buy the book, um, YouTube videos. Because trust me, I remember when I was starting my journey, I read so much, invested a lot of money and time into trying to learn as much as possible, and it paid dividends that I'm able to do this for my son. And looking back at it, back in, what was it, 2019, 2020, when I started learning everything, and it's paying dividends now. Back then, I didn't know. Obviously, I didn't have a family yet, didn't have a kid yet, and all that. But I'm glad to have spent that money, and I'm glad to have spent that time. So now his financial future, for the most part, is secure. Everything else is just raising him, you know. But definitely appreciate you guys stopping by. Again, go to the website. I'm going to leave some links down below, some stuff for Robinhood, stuff for Public. I got to put an Ally Bank link down there too for you guys to go open up a bank account. Definitely look for a high yield saving account. So I'm going to have Ally down there in the bottom. Watch list will be down there in the bottom. The stock research tool will be down there in the bottom. Pretty much everything you need is going to be down there in the description. Again, appreciate you guys. Have a great one. Peace.